Hello, everybody. It is your favorite real estate professional, D. Scott, with DD Real Estate, powered by Keller Williams. And I am here with Tony Conway. And, Tony, you and I have been having real conversations about commercial real estate. And you are a commercial lender. And so I thought that it would be a good idea and a good time to bring our behind the scene conversations to the forefront, to our community, um, to people that already know that we do business. But the cool thing about this conversation is, again, we had three different conversations with three different type of clients, right? And I was like, you know what? This is the third time in a week we've been having this conversation. Let's just bring this to the public so that we can demystify, if that's even a word, some myths and some facts, and just kind of help people break some of these barriers about commercial lending. So I will let you have the floor. Tell us who you are. Tell us how long you've been in business, and we're just gonna have a candid conversation in front of the people.
Good afternoon, everybody. My name is Tony Conway. I've been in finance over 20 years, under 30 years, and a significant part of that has been both in residential lending and commercial lending. Primarily, right now, I do commercial lending and have for quite some time. Quite honestly, whether you're a business owner looking to purchase your first building or investor expanding your portfolio, or part of a church or nonprofit organization, just exploring whatever your options are. My goal today is just to help simplify
Yeah.
commercial financing and answer some of the questions I hear most often.
Yeah. So why don't we just talk about, the team and how important it is that you have a solid team and who should be on that team when it's time to, have the conversation about commercial real estate. And really, we're talking about purchasing commercial real estate.
Yeah, I think that's important. Dee, thank you. I think it's something that's often overlooked. I think that the most successful commercial transaction doesn't happen because one person did everything right. It happens because the right professionals are involved early. So typically that team includes your realtor, your commercial lender, and in some cases there's a CPA involved, or an attorney if needed, depending on the size of it and the complexity of it, and then an insurance advisor. So when those conversations happen before you make any offer on a property, we can often identify financing options, and avoid unnecessary delays, things like that. So those are typically the most important things that are brought to the table.
Can I ask, so when someone says I'm looking to buy a commercial piece of property, is there a typical timeline? I always get asked this even on the residential side, like how long is it going to take me to get pre-approved? Well, it really kind of depends, right?
Yeah,
And
yeah.
so I'm asking you this on purpose. What is typically the turn time from the time that somebody raises their hand and says, "Hey, I'm looking to secure a commercial piece of property"?
Yeah, there's there's a lot of components to that question, and the reason why I say that is because you know um, I probably the fastest I've ever gotten a commercial done is maybe 60 days, and that usually doesn't include real estate. But when you have real estate involved, obviously there's a lot more to it. There can be some unnecessary delays coming from either side. It could be from the selling side, it could be from escrow. I mean, there's a lot of different components to it. So the safely you it can be 90 days, but oftentimes can be longer than that. And again, it really kind of just depends on the complexity of the deal. Now, one thing that's certain is that when financing gets done, whether it's residential financing or commercial financing, the important piece is getting everything on the checklist, because it doesn't leave, well, it shouldn't. For me, it
Mhm.
doesn't leave my desk until I have everything on the checklist, because we have to take all the information that's needed to make the submission into underwriting and processing to get the loan going. We need to have everything on there, because if you don't have everything, say you're missing some tax returns or they ask you for a balance sheet, income statement, or a proposal. If you take that and submit it without it, it'll go into processing. It'll go through the queue, which could be a couple of days to a week, and then
Sure.
it'll just get kicked right back, and then it starts all over again.
Yeah.
So, in order to avoid that, the important thing is making sure that we set the expectation of it being submitted when everything on the checklist is back.
Okay, understand. I want to shift a little bit to down payment. Typically, what is needed when you are purchasing, I would say your first commercial piece of property, what's typically the down payment
Um,
percentage?
yeah, so down payment can vary, because it can be as little as 10%, but oftentimes it's 15 to 25, and what that depends on is the program that it goes into for financing, whether it's
Okay.
SBA or conventional commercial. And it also depends on the property type too. So if you're buying let's say somebody wants to buy an apartment complex, it's a couple of $1 million, 3 million, 1 million, whatever that is. Something like that, that's non-owner occupied, but you're using it as an investment. You're probably going to need 25% down on something like that. But if you're
Okay.
buying a building that you're going to occupy the building for your business, even if you rent out some of the spaces, you're going to need somewhere at a minimum of 10% down and maybe a maximum of 20%. But oftentimes it's right there in the middle at about 15%. And there's a lot of different determining factors, so it's hard to say exactly.
Okay. Um, when we are talking about down payment um, programs for commercial property, I want to want we had a client or we have a client that is looking to purchase commercial property, and he had a question about the equity, repositioning his equity of his home to put down towards this commercial building. And I want to really talk about some myths and facts about what that may look like. Will it count against the debt? Will it harm the income? What does that look like?
Yeah,
Um, yeah.
uh,
So yeah,
it,
speak a little bit on that.
yeah, really good question. And quite honestly, it's probably one of my favorite topics because it's also one of the biggest misconceptions. So,
Sure.
can I use a HELOC or home equity loan to help buy a commercial property? Many people think that you can't use a home equity line of credit or HELOC as part of a down payment for an SBA commercial loan. Um, and that's not always true. Depending on the SBA program, lender requirements, and your financial qualifications, a HELOC might be an acceptable source for the required equity injection. It doesn't mean it's always the right solution for everyone, and that's the important piece to know. But it can absolutely be part of a well structured financial strategy. And here's an example. So,
Okay.
and to keep the numbers simple, I'll use $1 million. So, suppose you're buying $1 million commercial building. You have plenty of equity in your home, but you've intentionally kept cash inside of your business for payroll, inventory growth, rather than
Mhm.
draining your operating cash. Using a HELOC for part of the requested equity, it could allow you to purchase the building and maintain the liquidity that you have in your business.
Okay.
It just kind of depends. So I think there's some real advantages to structuring it that way. One, it allows you to leverage existing home equity, which is important. It helps
Which is
prevent.
why this is why I tell people, home ownership is so important because
Yes,
you just do not know what opportunities could be availed to you and how you can reposition your asset and your equity. There are things that you may want to do. I know most people, they do work a 9 to 5, but what
yeah,
happens if they do want to be an entrepreneur and venture out or
yeah,
buy that piece of commercial property? Now you have equity, you have a place that you've laid your head and it has built you some wealth to be able to do something different, even just with your life in general.
right.
Yeah.
So it definitely allows you, to leverage existing home equity, but there's some other things too. It helps also, which is probably one of the most important pieces, is it's important as a business owner to preserve business cash revenue. And so
Yes.
utilizing your home equity will help you preserve that cash. That's probably the most important piece because when you're getting evaluated on whether or not you can purchase another building, it's always going to be based on your business cash reserves, income, and what kind of cash flow you have. So keeping that additional liquidity that you have is important because it's going to be taken into consideration.
So
Um,
even if you do have the down payment, still HELOC, if you are a homeowner, makes sense
yeah,
because you can actually use that as reserves for your portfolio, for your commercial portfolio. Is that what I'm hearing you say?
yeah, and in a sense, it can help you. It can help you, act on an opportunity sooner than rather than trying to wait for additional cash savings.
Yeah,
But the important thing to point out is that there's also some considerations. The HELOC is secured by the home. You're adding another monthly payment. Many of the HELOCs have variable interest rates, which means your payment could change over time.
sure.
And that's something that we all consider, on my side, the lending side, when we're looking at it. So you're also increasing your personal debt to support the business investment. And this is why we don't simply ask, you know, can I do it? The better question
Sure.
is, should I do it?
Should I do it? Yeah.
And that's where a lender such as myself can help evaluate and complete financial picture to determine whether or not the strategy makes sense. And most of the time it does. It's just a matter of, if it makes sense for the individual purchasing or not.
I think one of the things that just in my journey of real estate and have been in the business for 20, it'll be 21 years now, soon, is, you know, the trusted advisor thing is a real thing, right? There are a ton of real estate agents out there. There are a ton of lenders out there, but not everyone is the same, right? And I think particularly in this climate, who you hire really it absolutely matters. And you know, having the expertise and the experience, being able to think through different scenarios, being able to come up with different scenarios and solutions for the client, that is invaluable. Because things can go real bad if you get into the wrong hands, right?
Absolutely. Yeah. Yeah.
Um,
Completely agree with that, and I'd like to touch on that
yeah,
just a little bit. To your point, D, it's very very important because when it's all said and done, even on the lending side, it doesn't matter what bank you go to, we all pretty much have the same products. But what does matter is the way that the solution is being prevented or presented. Pardon me.
yeah,
So, and what I mean by that is everybody has different sets and attributes of being creative or smart, intelligent, whatever. Uh, and what this really is about is whether or not myself or you, D, can listen to our clients' needs and then
yeah,
relay that story. That's what really gets the deal done. It doesn't matter because the underwriters, at the end of the day, they're going to look at it as it's kind of like a numbers game, They take the information that we give them, they look at it up against whatever the rules say and say, can we get it done? But there's a couple of things that they could miss, and part of that is understanding the story. So for us, the most important piece is taking your almost like an attorney, we take the information that you give us and we scope out what that story looks like in a manner that's palatable for the underwriter, that they can hear and say, okay, now that makes sense. Yeah, let's get it done. So working with the right team is important, and then setting the expectations. Having the transparency and relaying all the communication, looking at the risks up front. So those are the things that we do together, D, when we're talking about trying to get a loan done. We look at all the risks up front, not for us, but for the borrower. If is it the right move? Is it the right property? Things like that. So we always take a look at the holistic picture and then agree. And then once we agree, then we come back to you guys, the borrower, and say, you know what? We've discussed this. We think it's a great idea. We're absolutely going to push forward and advocate for you.
yeah. This brings me back to a conversation that you and I had collectively with a pastor who was looking for a property. And so we all got on the call, and really he ran down, this is what we owe on this building, this is the assets that we have, this is what I'm thinking about doing to the building in order to bring in income, supplemental income, so that we are positioning ourselves to be able to support the mortgage on the second building. And the
Mhm.
one thing that I heard from you was, great, let's put together the story, right? Like,
Yes.
how much do you think you can make from this venture? Um, doing what you're going to do Monday through Friday for the building. What do you think the rent is going to be? We can actually look at that, right? And so
Yeah.
we just in real time, I was like, oh, I'm looking at Tony write the story to be able to present. 'Cause, and I mean, and again, we're talking about professionals who, they pay us to think, right? So
Yeah.
20 years, hopefully we've learned something along the way, and we're forward thinking about how do we put this together to get to the win for our client. And so all
Yeah.
I heard was, okay, so the story is you're going to make X amount of dollars during every single month based on rental agreements, based on X, A, B, and C. That will then be able to reposition you for a position to purchase the property. And so that is one thing that I think, it's not that you can't teach it, but realtors and the broker, they have to be able to think that way. They have to be able to see the end goal, and ask the right questions for the clients to be able to put together this portfolio and presentation.
Mhm.
Um, and I don't want to say that it's rare, but it is rare. It,
Yeah.
it, it is rare. I
Yeah.
think that sometimes it's, what are you looking for? Let me find the square footage. Let me find the thing. And let's just, and you can't think like that. You actually have to be forward thinking. You do have to think, you have to be an outside of the box thinker a little bit, particularly in this climate, especially when terms, programs change,
Hmm.
and for the lender to be up to speed on the type of products that are out there as well. I
Yeah.
want to talk to you a little about, you were talking about underwriting, right?
Yeah. Hmm.
Um, how important is it for you to understand what an underwriter is looking for?
Yeah, it's probably one of the biggest pieces.
Yeah,
More importantly, is understanding how to provide the information that they need. Because, like I said, with all lenders, you know, they don't always get a loan that can get to the finish line
sure,
because there's different pieces that need to. And again, I don't want to keep referencing an attorney, but it's very very similar. How some attorneys are more productive than other ones because they understand the game, and that's what this is
sure,
about. From an underwriting standpoint, the underwriters, they know what they need. They've got rules and boundaries and regulations, but some of the underwriters are dry. They don't always have the clearest picture of creativity. And that's our
sure,
job. Our job is to, quite honestly, I mean, we're doing due diligence on behalf of both the client and the underwriter. And so when we're looking at a situation that can go, and it may not fit exactly in the box that the underwriters are looking for. And if you have a lender or a real estate agent that doesn't understand that, then it may not get you to where you need to get to. It may not even get done at all. But understanding what you're trying to do, and then that's us relaying that story, but in the language that the underwriter understands. That's the
yeah,
biggest piece in commercial lending because again, they're going to step in with their regulations and all of their rules, and they're going to reference their guidelines, and they're going to try to make it make sense out of that. But they need more ammo, and that's
got
where
it,
we come in. So the more that we understand, and the better that we can tell the story, the greater opportunity there is to get that to the finish line. That's really the
yeah.
bottom line.
Got it. I want to pivot a little bit. I want to tap into refinancing commercial buildings, commercial
Okay.
properties. And I actually want to just specifically go to the church buildings, right?
Okay. Yep.
Um, What is it that is necessary or is needed when a building of sorts is in a position to refinance to be able to get a lower interest rate? What are some of the things that are needed? What are some of the things that many may think that they need that they don't? Um, should we be looking at improvements? Are improvements necessary for a particular a refinance? Can you speak a little bit, to that?
So what happens in traditional conventional financing is most of the time they're only done at 5 years at a time.
Right.
So if it's $1 million, then it'll be a 5 year term with on a 25-year amortization, and then at the end of that 5 years, they have to refinance again. And in some cases, I've seen 10, but they're very expensive if you can even get them anymore. So most of the time, the fixed portion is only for 5 years. And the reason why they do that is because they need to keep people accountable, not churches, but any business, to make sure
Mhm.
that they're being very responsible with their finances. Not taking out massive distributions and recklessly spending and things like that. The lenders want to make sure that the businesses are profitable. And for the church, you know, um, churches and nonprofit organizations often have financial structures that look very, very different from traditional businesses. So instead of
That's why
sales
I wanted to
revenue,
speak specifically to this.
yeah.
Yeah.
So instead of sales revenue, they rly on donations, grants, fundraisings, tuitions, membership,
Sure.
contributions, tithings, things like that, or tithing. We call them tithing units and lending. But because of that, lenders evaluate them differently. So
Okay.
we're looking at organizational stability, leadership, financial management, the organization's ability to sustain future operations in all those categories. So many nonprofit organizations successfully finance properties purchases, expansions and different things that they want to do every year. And we can help get that. The important piece is not just the lender, but well, I shouldn't say that, not just the bank, but the lender, the person that's working on it, the loan officer, the commercial loan officer. Do they understand it? Because there's a level of fight that needs to happen when working with the church, because there's already it's not a disadvantage, but there's already um, some additional, I think, like defenses from financial institutions put in places for churches
Sure.
just because it's nonprofit, or not for profit, depending. And so the having a lender that understands churches, I go to church myself personally. I finance the church that we go to or that I go
Sure.
to, as well as several other ones. So I know churches and the financing very, very well. So the big piece is making sure that whoever you work with, does that bank's representative understand what it means to do a church loan? Because there's even different forms.
Sure.
And so telling that story is a lot different. And if it's not done correctly, then they may inadvertently, disqualify the church prematurely.
Yeah. Now, so as we're talking about this whole refi, are there upgrades that actually need to be done in
They're
order to, you see what I'm saying, to
yeah,
refinance the property?
not
Or does it
necessarily.
matter what the goal is to,
Yeah, it's not necessarily. The
Okay.
upgrades don't matter if it requires something like maybe a roof may need to get replaced. The underwriters will say that.
Okay.
So it's best, in my opinion, it's probably better to just kind of, explain to the lender and the real estate agent or the lender what needs to be done or what you're looking to do. What is the church looking to do with this property? What does the refinance mean? Is it just that, they're coming off their maturity dates coming to an end, so now they need to
Hmm.
refinance, or are they purchasing? But what's the goal? Is there any other goal outside of just stabilizing the loan? And that's the important thing to know. And whatever that answer is, the financial lender will advise them correctly. But
Okay.
really, unless something needs to be done to it, like there's a visible, if I go out and do a site visit and only half the roof is there, then obviously
Right.
it's going to
Got
require
it.
a new roof. But you don't need to actually make or put money into something to try to get the approval because you may not need it, you know,
Okay.
and you may end up doing something that doesn't need to be done for the sake of trying to get an approval.
Sure.
So
Like spending money on places that you really don't,
that's
if the
correct.
end
Yeah,
goal is
kind of
just
like
to
selling
get a lower
your
interest rate.
yeah. So it's kind of like selling your home. I mean,
Yep.
when somebody goes out and buys a home, they're not going to buy the home based on what the flower garden looks like. That's the last thing.
Correct.
It's
Correct.
does it make it look nice? Yes, but it's taken very lightly into consideration. It's just like trading your car in. Whether your car has a stereo in it or not isn't going to affect the value of that car. It's the same
Hmm.
thing with commercial lending. That adding to it won't necessarily get you the approval.
Got it. Got it. Let's talk about taxes. When a person, I'm going to switch gears, is purchasing
Sure.
a commercial piece of property for the very first time, they are a business owner, hypothetically, right? They are a business owner. They have been running their business, what, out of their home, or they've been renting a space, and now they really want their own commercial space. Is there a detriment? Let's talk about what their tax return should look like, the things that will impact them in the future, and things that won't.
Yeah. So lenders always look at last 3 years of financials,
Okay.
and of course, the taxes are a big piece of that. So there's going to be the last 3 years taxes. They're going to be looking at a balance in, if it's a business not for profit, they're going to be looking at a balance sheet and income statement, obviously profit and loss, probably some bank statements, things like that. But the taxes are a huge deal, and at minimum, they like to see at least positive 2 out of 3 years.
Okay.
In some cases, uh, if it's not 2 out of 3 years, it can still be done. It's just tough, but there's some other circumstances that could have affected it, like how did COVID affect the business? So
Correct.
there's a lot of unique circumstances that can really affect whether or not a deal can get done based on tax returns. So many business owners work closely with CPAs, really to reduce taxable income through deduction depreciations and other legitimate strategies. The challenge is that lenders only rely on documented income when they're determining whether or not they can repay the loan or not. So that's probably the big things. And sometimes when a business is doing, well operationally, but the
Yeah.
tax returns don't reflect the cash flow in a way that
Correct.
supports the desired loan amount, then that could be an issue. It doesn't automatically mean that financing is impossible. It simply means that we need to understand the complete picture. So talking it out is important. I would never assume if you feel like, well, I'm not at a good place, from a tax or financial standpoint, definitely don't assume. Just come to a lender, and let's talk it out. It's the one reason I encourage borrowers to talk with their CPAs and lenders before shopping for a property, period, because you need to know where you stand financially. And we can help you um, take a look at that total picture and figure out either what can be done or what needs to be done.
And just like I was saying, not all real estate agents and not all lenders are the same. Not all
Mm-hmm.
CPAs are the same either.
Yeah,
And
yeah,
I
yeah,
have seen some hotmess.com where it's like, what
yeah.
is happening? Um, what if a person is looking to purchase a commercial piece of property? How do you interview for a good CPA? Maybe the top three questions that you should ask so that at least you'll know, wait a minute, that person, this ain't passing the smell test. They got one out of three of these questions right. I know that sometimes CPAs, there are some that truly feel like my job is to make sure you don't pay taxes,
Mm-hmm.
right? And I've seen that bite people in the butt because
Absolutely.
they've zeroed out their income for 4 years. You know you didn't pay Uncle Sam. Well, but
Yep.
D, I made 250,000. Right, but you wrote off every thing, including the toilet paper that you buy at home. So now we are not in a position to show that we have any income, and you're asking for a $2 million loan. So can we talk? what are the top three things that you should be asking your CPA, and how do you position, even if even if that's how your mindset was, how do you in 2027, how would I get on the right track? Three questions that you'd want to ask your CPA.
Yeah, I'm glad that you said that. So the biggest thing, honestly, that I would start with is asking whoever your lender is, your trusted lender. And if you don't have one, then your real estate agent D can help connect you with one that's reputable. So that's the big thing, because
Yeah.
as lenders and real estate agents, we work with CPAs and CPAs, architects, contractors, stuff like that all the time. So we know a lot of reputable different entities out there that can help you. I think that's probably the biggest thing, because we'll know how to talk about what that looks like. If you want to get financing, and the information that you need to go back and ask your real estate agent, we'll look at the total picture and then determine what needs to be done from that point. And then conversing with either your CPA, if you have a reputable one that you've been using, or we can connect you with somebody that we trust, that we've worked with for a long time. There's some CPAs that I've worked with for well over 10 years,
Yeah.
that we refer back and forth to, that do a really, really good job.
Awesome. So two things, you all. Just make sure that even if you don't have a CPA right now, and there are, business owners that just don't have one, make sure you connect with us. We'll be happy to point you in the right direction. Um,
I do want to, if I can say one thing
yeah,
though, just real quick. So one thing is when financing, I just want to just give a quick idea of what we actually look for
yeah,
when either doing a purchase or a refinance. I think it's pretty important. So typically, when somebody applies for a commercial loan, we're evaluating both the borrower and the property. We're reviewing the property's value, condition, the location, the intended use. We'll come out and do a site visit to look at it. You know, we're also
mhm,
reviewing the borrower's credit, financial strength, payment history, cash flow. Equally important, understanding why you're refinancing. Are you looking to reduce payments, equity, improve cash flow, things like that? So there's a lot of things that we look at when we're doing that.
okay, okay, cool. I'm just looking. Myth or fact, Tony? Uh-oh, did we lose you? I think Tony was looking at a slide really quick.
Oh, there we go. Sorry about
There
that.
we
No,
go. There we go. That's okay. Let's talk about myths and facts. Myth,
yeah,
commercial financing is only for large companies. That's a myth.
yeah,
Okay. Okay.
yeah. It's definitely commercial lending. I think one thing that's important to understand is that commercial lending has changed significantly over the years.
Hmm.
Um, especially even since COVID, like that recently, it's just changed the game. But many of the myths have really stayed the same. I mean, to be quite honest, I think one
Yeah,
of the myths is that commercial loans are only for large corporations, like you
correct.
stated. And in reality, many of our borrowers are small business owners, physicians, contractors, franchise owners, professional service firms, nonprofit organizations, churches, small mom and pop shops. I mean, you name it. I think that another myth is that you have to have perfect financials. You don't. We kind of touched on that a little
Yeah,
bit. Um, I think while strong financials, they can certainly help. There's no doubt about it. Lenders, we evaluate much more than just one tax return, or
okay.
even, the last 3 years. There's a lot more to it. So we're typically looking at your cash flow, your business's history. In some cases, the individual's credit just depends on the type of loan. We're looking at experience, management experience, the
Okay.
property's performance, whether or not financing makes sense overall, because it always doesn't. But finally, I would say that a lot of people unfortunately focus on interest rate, and it's important, but it's really only one piece. There's so many different
True.
determining factors: loan structure, repayment flexibility, prepayment options, amortizations, and then having a lender who understands your long-term goals is probably the biggest piece of
Okay.
all.
What I want to talk also about is the type of financing that is available. So you have commercial financing solutions and what that includes. Can you touch a little bit on that?
Yeah.
I think we talked about owner occupied commercial real estate,
Yep.
um, investment property financing, um, construction and renovation, business acquisition. I'm so is there any other type of lending that yields for a commercial loan?
Yeah, there's quite a bit, really. I mean, it seems just like it's black and white, but the honest truth is that commercial lending isn't a like one size fits all type of thing. Some
Okay.
borrowers need financing to purchase a building, some are expanding. Others need renovation funds for or equipment financing. Are you purchasing an existing business that's already up and running, just buying it from the previous seller? And that's why there's several different options available, including the standard conventional commercial loans, construction, obviously, loans, and then there's SBA programs. Additionally, lines of credit for like working capital, and then we have some like customized loan structures that we can put in place too. But the biggest two of those would just be conventional commercial, which also includes construction, and then SBA programs. And SBA, there's a couple of different SBA loans, but the primary ones are SBA 7A, which can be used to purchase a business or just get an SBA loan for working capital. And then there's SBA 504, which is typically used when real estate is involved. So you're buying a
Okay.
building and sometimes you may be buying the building and buying the business separately, or in some cases together. And SBA isn't just for startup. Um, Sometimes it can be used if the individual borrower doesn't fit like the conventional guidelines. We can switch to SBA. And sometimes if you just don't want to put as much money down, because typically conventional loans require a little bit more down payment than an SBA does. The SBA requires less, but the guidelines are a little bit different. So we really have to just look at everything to see what fits better where. And there's also difference in the rates.
Got it.
And one thing on those rates, because I talked about that earlier, it's really not the most important thing. At the end of the day, depending on your need for getting a commercial loan, the ultimate goal is to get to the finish line. The rate's going to be fair no matter what, because we don't make money um, like on rates like that. It's not really like that. There's a number of different determining factors that go in to determine what that rate will look like. It's just some kind of a spread above margin, but it's not the end all for us at all. You know,
Got it.
and two different businesses or borrowers can have two very very different rates.
Okay. Well, Tony, I just want to thank you for coming on. And again, like I said, we've had three different conversations in the past few weeks, and said, I think it is be helpful to just bring the conversation to the forefront of the community so that number one, there's not fear around, the business owners, the entrepreneurs, the churches that are looking to either expand, to buy or sell, or
Yeah,
to do something different. And so you don't know what you don't know. You don't know who to trust and where to start because, like I said, everybody has a lender and everybody has a real estate agent, but putting together the story, the portfolio, and having a trusted advisor is just vital. And can I just
yeah.
tell you guys, Chat GPT and Google are not trusted advisors. We just gotta stop.
No,
We
no.
gotta stop. We have to stop. It's just too much. Chatty's
Yeah,
doing too much. Chatty thinks she knows everybody. These
yeah,
these guesstimates are tearing y'all up, and
yeah,
so under having a advisor that understands number one, the market in real time, right? No one has
yeah,
a crystal ball, first of all. So if they say that they do, they're lying. We are watching the market shift in real time. We are watching ebbs and flows. And so that's what our job is. Our job is not to make the market, but it is to interpret it so that you, as a business owner, um, as someone who owns a property or somebody who's buying for the first time can make a good informed decision. And you've got to have a lender who understands what they're doing, and understands what's happening in the market and on the lending side, because it changes, right?
Yes,
Guidelines change. And
that's right.
so to have a trusted advisor to be able to call me and say, hey, D, this guideline has changed, or this guideline is set to change. They voted on it. That magic is happening October of 2026. So I just want to let you know that they're tightening up the guidelines here. Certain guidelines are going to be loose by then, but we want you to know, so that if you have anybody that's kind of on the fence, that we need to strike while the iron is hot. And so I want to thank you for your time. Tony, where can people reach you if they have questions?
Yeah, reach out to me anytime via cell phone is probably the easiest one. Just shoot me a text or shoot me a call, and then if we need to have a discussion where I send you info, then I'll
Okay.
shoot you an email. But yeah, my telephone number is 253-260-7930. Again, my name is Tony Conway, and I'm happy to help. Even if you just have some questions, maybe you're not ready right now. It could be a couple of years down the road. But call me for anything. It doesn't matter what it is. If you have some questions or you just want to get a scenario or something like that, I'm happy to help any way I can.
Yeah. And you guys know where I'm at, 206-356-8041. Thank you all for your time. And I'm going to put my Calendly link in the comments below if you want to schedule a 15-minute consultation. Just have a conversation. If you're like, D, I got a couple of what if questions, reach out, get on my calendar, and we'll talk soon. All right. Bye, everybody. Thank you, Tony, so much for your time.
Very welcome. Thank you, everybody.
All
Thanks,
right.
Dee.
Pastor Calvin, thank you for joining us. Thank you for coming in. I appreciate that. All right, everybody. We'll talk soon.